This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It is 2/13/22, show number 464. Well, Nick, we've got Options X coming up shortly, don't we?
Yes, we do. This coming Friday is going to be options expiration for the month of February. It's that time of the month again. And by now, everybody knows this is a week of institutional game playing. The large institutions generally will calculate where the small retail options trader has placed his bet. And what they'll usually like to do is take those stocks and move it away from the popular strike price, which all the small retail traders are looking for. So it's a game that gets played each and every month. We talk about it on here each and every month. You're not going to hear it on CNBC. You're not going to hear it on Fox Business. You're not going to really hear it anywhere else. But it happens and it's going on. So be careful this week. It's a week of institutional game playing. Stocks that are in the stratosphere generally will have pullbacks. Stocks that are beaten down into the gutter will generally get bounces. That's what normally happens. It's not 100% perfect, but watch for that and you'll see quite a bit of it.
All right. And we've got the Consumer Con Job Index or CPI report coming up tomorrow. So that should be fun.
That's right. Tomorrow, 8:30 a.m., that'll be released, CPI report. This report has been a market mover all of last year, 2022. Every time that report was released, it moved markets. So it could be, again, a market mover tomorrow. Remember the hot number. A hot number would definitely signal to the market that the Fed needs to raise rates. And a weak number would be the opposite, where everybody would think that they may need to lower rates. As I always say, let's see the market reaction. But another little tidbit here, Kerry, keep your eye on the 2-year Treasury note yield. That yield is critical, and that will tell us a lot more in the bigger picture. I know a lot of people are overlooking that, but that yield is now back around 4.55%. So that's really what the Fed needs to follow. Forget the CPI, in my opinion.
Hey, Nick, we glossed over last time the employment report, which was super bullish. But, who knows how accurate it is. I mean, it just seems like a completely contrived number. If maybe I'm crazy, but call me a conspiracy theorist if you like. But what do you make of it?
Well, Kerry, if you've just been watching the news recently and you see companies like Disney laying off 7,000 people, you look at Microsoft laying off, look at Apple laying Google laying off, you look at Meta laying off, you look at so many Fortune 500 companies, and there's dozens with layoffs. So you're saying to me, Boeing is another one, Dell Technologies, as they call themselves now, 6,500 job layoffs. So these higher paying jobs, we're seeing layoffs, and they're going to try to fill the lower end paying jobs. So, that job report, I've never believed it ever. We've talked about it on this show. I looked at how they calculated. I always chuckle at it because it's almost like imaginary numbers. But I guess you could do that when you have all the power. But I don't believe the job report for one bit. But right now it says that there's no workers. And you know what? I see there's no workers in a lot of places like McDonald's, Walmart. They're all still hiring. But when you get to these higher end jobs, where they pay, a much, much bigger wage, we're seeing lots and lots of layoffs. I mean, you could just go through the tech sector. I mean, it's just incredible how many companies have announced, layoffs, not in, 50 people. You're talking about thousands.
Yeah. So it seems a little counterintuitive, shall we say?
I would say so. And again, that will come back down the road because remember, it trickles down, right? So maybe the guy at the at the sandwich shop is hiring, but all of a sudden Boeing lays off 2,000, Dell lays off 7,000, Microsoft lays off how many thousand? People aren't going to use those services. So you got to realize these higher end jobs, when they go away, they trickle down to the lower paying jobs, and that's a big problem. And again, we're not feeling the effect of it right now, but at some point we will.
Yeah. Well, the state of the economy here, you know, well, it's like the halftime show at the Super Bowl, smoke and mirrors with very little talent.
Yeah, I mean, it's just we're going to just see this continue. I don't see it stopping. You see a lot of cloud software companies laying off. I mean, it's just by the day we're getting more and more layoff announcements on the higher paying jobs. But if you want to get a job at somewhere that's a low wage job, there are plenty of them still. But that will start to trickle down eventually, and again, we'll see this. It's not, there's no hidden secrets. We've seen this before. But for now, I mean, we'll celebrate the 517,000 new jobs they say were created by the administration.
All right. So looking ahead here, we going to see more stimulus? Are they going to start priming the pump again? Or how long can they push this for is the question.
No. This is just a very good counter trend bounce on the anticipation that the Fed will backpedal. And that's what the markets do. They look forward, right? They don't look backwards. And a lot of times markets will anticipate certain things. And, even Jay Powell's last FOMC announcement in his press conference, he was saying that he's going to raise rates and the market didn't believe him. So the markets were just going higher. Today, we got a sensational rally on our hands. It's options X. But again, there's only, there could be some more upside here in the near term. I was expecting a nice January effect bounce. We got that and then some, and it's turning into a February move as well. But overall, I do think that this month will probably cap it.
All right. Well, I think you're probably right, but one never knows about these things because the market can stay... what do they say? The market can stay irrational longer than you can stay solvent, right?
That's right. That's the saying. And it's very true. And this is why I use charts. Because if I wasn't using charts, I'd be short a million things right now. I do have some put options out there, but I have no shorts out there on swings. And that's because I'm getting ready to put some shorts out there. But we're just not at my numbers yet. And this is why we use charts.
Okay. So gold has been a little weak as of late. Silver took a hit as well, but they're kind of holding steady there. You think they're going under? You think gold's going under 1,800?
Yeah, right now I have it going down to around 1830 on the daily chart for gold futures. We'll see what it does there. That's going to be a pretty important level overall, but I do think we'll get down there. Right now we're at around 1870, 1869, but I do think we're going to go test 1830. We crack 1830, obviously 1,800 becomes the next psychological number. That was also a big consolidation zone in December before breaking out to the upside. So there's going to be support there. Gold has lots of short-term support levels on the daily chart right now. So I would just look for that dip down to around 1830, then ultimately 1800. We'll see how it reacts there. Obviously, there's a war going on in Ukraine with a lot of NATO involvement. So it's difficult to get too bearish the precious metals because obviously that's where money's going to go if this war were to heat up. If the war just stays the way it is, I do think gold is in for more of a retreat. And, we break certain levels, we'll get down, ultimately back to the lows that were made late last year. And then, we'll get to the 1,500 handle. It's the green light to buy all the gold you can. So that's kind of the forecast that I have laid out. That's what I'm looking for. And we'll see how it unfolds. But this is something that we're going to have to monitor on the charts going forward.
Okay, finally, cryptos, Bitcoin. You think the rally's over for Bitcoin? It goes back down, retraces, or what?
Not necessarily. It is stalling out today. It's had a huge run recently as the markets have inflated. But, last week it was interesting. You had Fed Governor Christopher Wallace coming out and making a statement. And I'm going to read his exact words. He said, a crypto asset is nothing more than a speculative asset like a baseball card. If it goes to zero, he said, if it goes to zero, don't be surprised and don't expect taxpayers to socialize your losses. So if that's not telling you something, I really don't know what will.
You know what that's saying. You know what that's saying.
Right.
You know exactly what that's saying. That
Of course I
is
know.
a shot across the bow. That really
That
is.
is.
So they're planning to
That
crash
is.
it, obviously, right? I mean, can we infer that
He's
from what he's saying?
Well, he's telling you nothing's going to compete with their currency is really the bottom line. And ultimately, we know the next currency that comes out when the dollar is replaced is going to be central bank digital currency. The Fed should be completing their 12-week so-called pilot program right in New York. So, we had chatter last week that the UK is going to start to unveil their central bank digital currency, the Bank of England. Yeah, obviously we know the euro is going there because the euro is a disaster. The whole entire
They have no
financial
choice.
system they have no choice. It's a disaster. And the bond market has been, broken and depleted for a couple of years. They've gone negative rates. Everyone knows that story. There's just no, it's like that movie called No Way Out. There's just no way out. This is where we're going. And, kudos to this guy, Waller, because he basically laid it on the table and he basically told them what they're going to do.
And you can't complain now that you're a victim and nobody told you this was going to happen and all that stuff, right, Nick?
That's right. And again, why did they ever allow it in the first place? There's lots of theories for that, but now we're at a place in time where you have so many people asking for regulation, right? Crypto, when it came around, was supposed to be the anti-regulation. It's supposed to be cutting out the middleman that, the ABM Ambro that takes your, changes your money at the airport for you, right? You're going to cut that guy out. But no, now they got you crying for regulation. You got so many people saying, I lost money with FTX. I lost money with this one and with that one. So, again, this is just going by the wayside slowly but surely. And again, something I've been saying from the very, very beginning would happen.
Well, the cry for regulation. Remember, Bernie Madoff was in one of the most regulated industries in the world, Nick. And look what happened, right?
That's right. That's right. I think in Argentina one time they had somebody say, "Don't cry for me, Argentina." So
Yeah, it was Avita. Avita said
you
that.
see what happened. See what happened to that currency.
Hey, so I just want to read something to you from our YouTube channel from one of our community members, My Shadow. It says, "You have had Nick on for quite a while now. I've come to trust his judgment after doubting him initially. The last time silver ran up, I was convinced it wasn't going to stop. Nick accurately predicted where silver would go." So just a little pat on the back there to you, Nick.
Thank you, Kerry. It's not very often I get to run a victory lap, but we're going to be buyers of silver again. It's just not yet. But again, we were fortunate to nail the bottom and get out, where the charts tell us to. But this is really not a testament to me. I mean, I learned how to read the charts, and it's not perfect, but I'll do my best. And hopefully, a lot of people did well on that trade. But that trade, in the bigger picture, is long from over, and we'll be reestablishing a position in that once again down the road.
All right, excellent. Well, that's it for today. We will see you on Wednesday. Make sure you go over to Nick's site, inthemoneystocks.com, see his trading record, how he has consistently beaten the indices for decades. The Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails welcome, kl@kerrylutz.com. Post your YouTube comments below. We will get to them. Nick, we'll see you on Wednesday.
Sounds good, Kerry.